Good afternoon, everybody. I'm James Tieng. I am a co-founder and managing partner of Lumos Capital Group. We're a growth stage private equity firm based in New York City. We invest across the age spectrum of education and workforce development. We manage about $300 million of capital and growing today. And thrilled to be here to moderate this exciting panel. I did not prepare, and my panelists know this, but I did ask ChatGPT for some help. So with that, and for this interesting topic of the bull versus bear case around EdTech in the era of AI, we'll get started with getting to know our panelists for sure. We may have one more join us shortly. But to kick it off, I'd love to just get a show of hands. Who is an investor in the audience? Okay. How many students do we have in the audience? How many educators, inclusive of administrators? How many founders or operators, management team members of companies? Great.
On that last question, can we see how many are early stage versus, say, post-Series A? Early stage and post-Series A? Okay.
Great. Well, it's a good orientation for us. Let me kick it off by just asking my panelists here, Vivian and Sanjay, to give a very brief introduction targeted around sort of where they invest and what stage they invest in to help orient you to who you have on stage here.
So I'm Vivian Wu. I am managing partner of ventures at the Zuckerberg Initiative. We are a unique philanthropy that was founded by Mark Zuckerberg and his wife, Priscilla Chan, in 2015. Really, our mission is to build a more just and inclusive future for everyone. And we have a focus on science, education, and local communities. So from an investment perspective, we actually started investing in 2014, and our mission is very much to find mission-focused entrepreneurs who are building transformative solutions around the globe, across the lifelong learning spectrum in education, but certainly supporting the issue areas that CZI cares the most about. And our goal is to find companies that are leveraging entrepreneurship, innovation, and technology in order to build more sustainable and scalable solutions. So in terms of the types of investments in education, we are typically a little bit later, and our Series B is probably our sweet spot, although our focus is pretty broad. We also have investments, probably half of our investments are in the US, half of our investments are outside in Africa, India, Latin America, Europe, et cetera. And some of our companies that we've invested in, to give a sense of the type of companies that we are inspired by, are companies like Love Every, companies called like Handshake in the pathway space, companies like Open Classrooms in the future of workspace, and Emeritus, also here at the conference, as well as a bunch of companies in K-12, like Newzella, company called Nerdy or Varsity Tutors, which does tutoring, and a company called Panorama Education, also at the conference. So anyway, excited to be here.
Hi, everybody. I'm Sanjay, Swamy. I think our third panelist just joined us. I'm a managing partner and co-founder at Priven Ventures. We invest generally across the globe, but primarily focused on companies that have some element of their operations in India. We're the first institutional investors in quizzes, and very happy co-investors here with the GSV folks. Education for us is for profit to make a lot of money. So we don't have the impact goal, but it is always an outcome. So it's a privilege to work with young entrepreneurs here. We're entrepreneurs turned VCs, so we like to work very early with founders and like to, I guess, quite often, co-create solutions as well. We love working with founders who are either looking at learning outcomes, but also a lot of companies that are focused on the operations of education, right, which I think are also largely broken, and where we see AI and generative AI playing a very big role. Yeah, it's great to be here and look forward to a provocative conversation.
And then I'm Michael Cohn, one of the founders and managing partners of GSV and GSV Ventures, and could not agree more with everything you guys just said.
You weren't even here.
What's that?
You weren't?
You know what? Great to be here. You know what? We've been doing this for 15 years. This is, I think, my 86th panel I've been on at GSV. This is the first time I've ever been late, so apologies, but looking forward to a wonderful discussion.
Thanks, everybody. So we'll start with softballs and hopefully get into more curveballs and hardballs shortly. We can sort of maybe just walk down the line here. First softball question is, as you think about this year, 2024, staring out at the investment landscape, which may include companies here in this audience today, where do you feel the most level of bullishness or excitement for what's possible in terms of investments that you could be making today?
Yeah, I think from a focus perspective, we will continue to care about some of the key areas that have driven our thesis on impact. One of which is we are very focused on evidence-based research. Another aspect of it is companies that really understand that it's not just about academic factors of success. We call it the whole child, or comprehensive student development. And then I think also increasing access and affordability. So what that leads us to is, if I were to pick a couple of areas that we're specifically focused a little bit more on, one is we would love to do some more K-12 investing. There is a tremendous amount of need right now post-pandemic with learning loss, with mental behavioral health, certainly teacher shortage. And there's a lot of challenges that districts are facing right now around funding and enrollment declines. And so that's an area that we certainly have particular interest in and are seeing a lot of really interesting solutions. I'd say another one is we continue to be excited about the emerging markets. I think this idea of increasing access and affordability in environments where there are no solutions, that we really can take this entrepreneurship and innovation and really come up with something that has a very transformative impact. That continues to be of interest for us in various markets, including Latin America and India. And then I'd say the third area is, as you would probably guess, really just keeping an eye on what's happening in AI. That's a topic I'm sure we're going to talk about a little bit more, but really feel like there's a huge opportunity there as well.
Sanjay?
Yeah, I think a lot of things which were not possible are suddenly possible now, right? And I think it goes across the board from, as I mentioned earlier, operations of educational institutions, the admissions process, streamlining a lot of that, just making, I was talking to a company earlier today that's looking at the whole, counselor admissions process as well, and, just making that more democratized through technology. So I think there's going to be one wave of, with AI now as a tool, I guess, and some people think it's a weapon, but certainly a tool. A lot can be done that wasn't possible at the price points that take something that was very niche and make it mass market. And I think that's something that, it's not like you need to prove that there is a problem that needs to be solved. It's not like you have a TAM problem. It's really technology is going to make this accessible for the masses, I guess, similar theme to what you said. And even in the US, I think there are a lot of elements of the education system that are broken that suddenly, through technology can be made mass market. So that's a generic theme that we like, whether it is about the learning itself or whether it's about the process around education, the entire scaffolding of education. So that's one. The second thing, of course, is we're India-based, and so India is a big focus for us as well. And so there are a lot of, as you said, challenges and price points, and there's a lot of hunger there. There's a lot of demand. We have one company that's doing English language communication skills. And people in small towns in India are paying an arm and a leg for this program because in their households, they don't have anybody else who speaks English. So we're seeing some new opportunities emerge in other parts of the world that may not necessarily resonate here with the US market. And then I think the third thing is, I don't think we're seeing anything fundamental in AI so far. I spent a lot of time with the AIR Show. Some real innovation with the companies is what I was hoping to see. Everything kind of felt like features. And I think I would warn certainly people, you all are going to be starting companies, devoting the next 5-7 years of your lives. Just make sure the prize is worth winning. Right? I think that is the biggest concern I had from, because it's going to take more, it's harder to build a small company than to build a large company, believe me. And when that happens, you better have a big outcome that you're going after. So don't rush into getting something into market too early. Anyway, that's getting ahead of this question.
Yeah, and I'll kind of, if you'll allow me, maybe come at this in probably three directions. First and foremost, we've been at GSV, we've been investing in education, workforce technology now for the better half of 15 years. First off of our own balance sheets, and we've been managing outside capital here for about a decade. And the beauty of that is because we're focused on education, we're structured, we're rigorous, we're systematic, we're strategic. If you've known me, if you've known my partner Michael Moe, my partner Deborah Quazzo, our team, our partners, we tend to be kind of very consistent in those themes, right? Return on education. What does that mean? We invest in things that either increase outcomes or increase capacity or reduce cost. And if you kind of nail ROI, return on education, those businesses tend to be the most highly correlated with ROE is correlated with ROI. ROE drives IRR. So we're very consistent across the board there. If you think about the companies that are here, they're represented there in the portfolio. Certainly, many of them are household names here today. Those are the companies that over the past 10, 15 years, and many in the room today, have been doing so. Class Dojo, Course Hero, Coursera, Masterclass, Chegg, Degreed. We can certainly talk about quizzes that we're kind of co-investors in. Physics Wallet. If those of you that are in the room today haven't followed the Physics Wallet story, it is extraordinary. They gave an amazing presentation today on Sunstage. Go check it out. It is both the fastest growing EdTech unicorn in history. It's also the fastest growing profitable business in EdTech history, which is just amazing, and they're doing so with extraordinary outcomes. Now, 1 in every 4 students that's taking either the JEET or the NEET test to go into IIT is actually a PW alumni, and they are doing so at a incredibly low fraction of the cost of some of the other kind of players in that space. So great companies there. If we think about what we are most excited about now, particularly in kind of seed and Series A, what I would say is go follow the GSV Cup Top 50. I believe many of you in the room are actually kind of part of that audience. That's indicative of where we're excited about. Less so about kind of broad themes, which we can talk about what's happening K-12, higher ed, which is HIREED, which is kind of that last mile training, the connectivity between higher education and a more traditional sense in the workforce, and then also thinking about B2B, B2C. We have a broad representation there. I think we had 14 or 15 companies in the GSV Cup Top 50, which is amazing. And then what I would also say is from a seed stage, what has us most excited, and I'd love to get your guys' thoughts as well, is the rigor around product and product-centric building and kind of customer-centric building is greater today than it's been in quite some time. Both understanding the problem, the bigger the opportunity, and really having that voice of the customer embedded early on as it relates to things like willingness to pay. Because, oh, by the way, if you're building a company, you also need to have a business. So we're excited about that. We're excited about the fact that folks that are in the room right now, particularly at the earliest stages, are having that eye towards certainly having a product, launching it, getting validation, but also doing it with a business case that can actually be built and scaled sustainably over time.
When you all think about the other side of the coin, which is that's I think well said in terms of the excitement, whether it's thematically driven, impact driven, quality of companies, et cetera. On the other side of it, there's always caution that's required, particularly in, I wouldn't call it hype cycles, but in moments where there's an acceleration and a momentum in company building or the pace of trying to raise dollars. Where do you feel that the most in terms of, whether you would say it's areas to be bearish about or cautious about, or where material risks may be more obvious today than they might have been, let's say, 2 to 3 years ago? Because a lot has changed in the past 2 to 3 years as well. Vivian?
I think one of the things just top of mind, just as I look at the portfolio, is just, as Michael said, the last couple of years, there's been a tremendous amount of rigor that has gone into refining business plans, improving unit economics, and I think that has made companies more resilient, stronger, and better positioned than they have been in many years. Having said that, if you're a leader of those teams, we have a situation where people are tired and there's an employee morale question that is very important to manage through. And so when I think about my portfolio, that's one of the things I keep in mind. It's like, folks need some encouragement because this has been a very tough period. So that's one thing that I would say, and it's not bearish. I think in reality, there is, as investors, and I've been investing since the mid-90s, but it's this focus that we now have on profitability and really having good business models is absolutely the right direction to be going in. It's just, it has been very challenging. I think the other thing that I would say is there's, as we see oftentimes with these types of economic downturns or economic challenges, you have a couple of bright spots and then you have some challenges. Like the bright spots are, you oftentimes find that at this point, building a company is a little bit less competitive. Everyone's not growing quite as much. People are not throwing money at other competitors. But on the flip side, what we see on the later stage, for example, is a lot of companies that raised at very high valuations a couple of years ago that are now somewhat orphaned because there is no way to raise money again at a higher valuation. And if you don't have investors around the table who kind of shoulder to shoulder are saying, hey, let's think about what's the right thing for the future of this company. We need to make sure you get the capital to continue growing. We need to recap if necessary. But let's understand that the market has changed. Let's not be hung up on a valuation that is 2 to 3 years outdated. That could be very challenging for those companies to move forward. And it's been challenging as a result for some of us who are doing later stage investing to get deals done because there is a valuation gap and difference in expectation and valuation. So I think that for me is a concern because it does mean that there's a part of the market that may not move in terms of being able to continue growth. So that's definitely another area of concern. And I think one other area that I would say is a big question mark because of the fact that we do have a changing market environment in terms of valuations is there is a bit of a question around what the exit opportunities are for a lot of companies. And so I think trying to have that conversation, I think if any of you are entrepreneurs, having that frank conversation with your investors as to what it is that people's expectations are, what are realistic expectations, and recalibrating that, that's incredibly important at this moment in time. You don't want to be caught flat-footed. Someone thinks you're going IPO in the next year, and you're meanwhile saying, I'm not sure I'm going to be able to to grow more than 10%. So anyway, those are some of the things that I would say. I think if you're talking more broadly, I mean, I have a lot more to say on the AI side, but again, I'm trying to hold.
We'll get there.
We'll get
there. We'll get there. Sanjay?
Yeah, I'm a fintech investor, and we say every company is a lending company. Here, I think every company is an AI company, right? So I'll say a few politically incorrect statements, excuse me. But I think, look, there was a bull run, and I think we all interpreted and chased bull in very different ways. Invested in a lot of companies that we shouldn't have at valuations that made no sense at all. If you are one of those founders, as Vivian said, grow into that valuation if you think you can with the money you have, or get real, right? I mean, there is just no thing, there is no shame in doing a down round, getting a realistic valuation now, and building for the future, right? So that is, I think, something that's very important, and as she said, talk to your investors. Anti-dilution will kick in. That's the reality of it. None of us complained when we got those monster valuations, so we should not really be unhappy about it now. And I think it will work out for founders who are realistic. And we've had a couple in our portfolio where we just sort of said, look, that was just the wrong time, the wrong number, and let's revisit the valuation and do fund the company again with a more realistic valuation. And I think those companies are going to do very well over time. So that is one part. The second part is, I think we're still very, very bullish about the opportunity ahead. I think the better days are still ahead of us. This is a multi-trillion-dollar opportunity the world over, and a lot of unsolved problems, right? So you just focus on solving good problems. So when I started this business, one of the partners at Mayfield told me, good companies don't die of starvation, but they can die of indigestion, right? And we've seen some of that, unfortunately, but if you're building a good business, you may not get the terms you want, but you're never going to run out of money. I think there will always be someone at some price willing to fund the company. And in terms of exit outcomes, if you just focus on building profitable businesses with profitable unit economics, I think we all got a little caught up on saying, oh, this is a money-making exercise, right? And I think if you get back to the reality of entrepreneurs are just passionate about solving a problem, right? And by the way, if you're not passionate about solving a problem, you should not be an entrepreneur. right? The financial success is never a guarantee, so make sure you're in it for the journey. It's a 7 to 10 year journey, and you better enjoy every moment of it. Most of it will be sideways or downwards. There'll be moments of extreme blips that you should live for. I always say it's 5 days of glory and 360 days of frustration for an entrepreneur, and in a leap year, it's 361 days of frustration, right? So you don't even get a break in a leap year. But those moments are what you live for as an entrepreneur, and actually as investors, that's what we live for too, right? And as long as you're in it for the long term, good things will happen. I think if you're in it for a short term thing, then that's where people get into trouble. And I think we all forgot some of that in 2021. I would say across the board in the room, we all forgot that. So just make sure you're doing it for the right reasons. Take the long-term view. There will be some ups and downs. There will be some restarts every now and then. But if you take the long-term view, generally good things will happen. And I think that's the only advice I have to entrepreneurs here.
Yeah, I mean, I could not agree. I mean, snaps, claps, of course, give it up. Time out. Oh, sorry. Could not agree more. Could not agree more. Somewhere along the way, certainly in the past couple of years, people forgot this is really hard, right? Building companies is really hard. You know what's even harder? Building EdTech companies. If you just look at the raw data. There's a reason why venture capital, and I think all three of us kind of invest up and down the different company stages, company life cycles, whatever you want to call it. There's a reason why venture capital or growth capital is called risk capital. It's first loss capital. There needs to be, and we talk about things like risk-adjusted returns, but EdTech and EdTech VC and company building, all three of those are really hard. And I think that is the message that got lost over the past couple of years. And the feedback loop has changed, right? The feedback loop 19, 20, 21 was all about how can I get to my next round in under 12 months? I mean, we had a, I'm not sure if you're in this company, but we had a company that it was an Indian company that was re-domiciling into the US for certain tax reasons, and it took about 120 days from term sheet to closing. And we were investing at a $30 million valuation. It was a seed round. In between the time that we signed the term sheet and we funded the seed rounds, the company had a term sheet at a $400 million valuation, right? Which is like fun, but like, but that was very indicative of the market. It was actually not Tiger or SoftBank, but as we think about feedback loops, the feedback loop really needs to be, what do I need to do to get to that next stage of growth? And that next stage of growth isn't about capital, it's about talent, it's about scale, it's about customers, it's about product, it's about roadmap. So I actually think from a kind of capital formation perspective, the market has actually probably never been stronger because we've kind of refound that rigor and we've accepted and we've embraced the suck that comes with company building. On top of the fact, and for those of you that were in my partner Michael Moe's session last night, if you look at the macro, there's never been a better time to be in a greater need to be reinvesting and to be building product that can impact the lives of not millions, not tens of millions, not hundreds, but billions of people around the world. We have access to information. We have access to better data. And oh, by the way, we now have access to the most transformative piece of technology, I think, in our lifetimes. So as much as there is a kind of ongoing shift, bull versus bear, 361 versus 5, whatever you want to call it, I'd say 12 hours, probably 20 hours a day versus 4 hours a day. You never know what side the scale is going. But if you look at the mega trends and the underlying characteristics of what is happening in this market, there is certainly a kind of bear sentiment, but I'm incredibly bullish that the conditions are right for the folks that are in the room today to have the opportunity to build and build sustainably and to have both impact, but also create value in a way that probably wasn't there 3 to 5 years ago.
James, I may add just a couple more related points, right? I think the good thing for founders now is you don't have to worry about doing everything, right? Startups actually will only succeed when they're doing one thing extraordinarily well, right? But there was a moment in time because there was so much capital available, people thought that they needed to build everything. And the second thing is, you don't have to worry about competitors being, getting, outfunding you, right? And being able to bid 10x more on Google and Facebook and, get all the audience and all the eyeballs and stuff like that. So actually, you can build quite peacefully. Just focus on building your business. Of course, know what's going on in the market, but you don't have to keep worrying and looking over your shoulder all the time saying, every 10 minutes, look at TechCrunch saying, oh, somebody raised another $100 million or a $400 million valuation round, right? Stay focused on your business, and that's a great time actually to build.
No, that's great. As we think about AI and maybe technology more broadly, I mean, it's, I think, incumbent on all of us as investors, educators, administrators, company builders, to take the responsibility of responsible usage of all these things, especially in the hands of children, right? And if you take K-12 as one core age segment, AI certainly can have dramatic and is having dramatic transformative effects on how kids learn. But there are pitfalls, potential pitfalls, and again, I think it's incumbent on all of us to recognize and perhaps address preemptively a lot of these things. So, for me as a parent, for sure, I think about the role of AI and the ease of getting to perhaps an answer, but shortcutting the learning. Are there other pitfalls that you can think about, whether it's K-12, higher ed, that AI brings to the table, maybe differently or faster and kind of more dramatically, that all of us should be mindful of as we make investments, or for folks in the audience as they're building their companies, so that we can use AI for the best they can afford and not sort of enable things that frankly play into human nature, for example?
I mean, I'm happy to go because I was literally moderating a panel with Laila Ibrahim of DeepMind and Bijal Shah of Guild, and then Gregor Corrigan from Learnio. We were talking about leadership in the AI era. And obviously Google, DeepMind, and Guild, and Learnio are three of the most important companies in this space, both within the category, but also kind of broadly speaking. And the conversation that we had was about everything from, yes, bias and misrepresentation and AGI and unintended consequences. But it was really refreshing to hear, and I think one of the trends that I've heard, throughout the past couple of days, and hopefully many of you had the opportunity to go check out the AIR Show, down the road. We've got 7,000 people at the Hyatt. We had 15,000 people at the AIR Show, which was just amazing, and it just speaks to the level of excitement. And I think by and large, the overall sentiment is that folks are building sustainably. They're mindful of unintended consequences. I think that particularly now, given the collaborative nature, as we were seeing with some of these larger models and kind of how they can be tweaked, it kind of feels like that's already been navigated away. For those of you that were here last year, GPT-2 was announced in November, right? We had Sam Altman was here. There was a lot of conversation around all these kind of co-pilot detectors, right? And then within a week, everyone's like, yeah, everyone's using AI. So there's obviously risk, particularly, and I've got two boys, 8 and 6, and they're, digital natives. They're on their devices all the time. Shame on us. But I do think that the sentiment has quickly gone away from call it a cheating standpoint, and it's more just about maybe ethical representation and ethical choices. That we are just making sure it's more about probably user-centric safety than it is, call it, risk for cheating. But Vivian, I see you got some thoughts.
Yeah, I think it's just so early that we don't know what the risks are, right? So I do think I'm probably of the mindset that we still need to be quite careful and thoughtful about some of these topics. One of the things that I mentioned earlier, we're part of a philanthropy where impact investment is just one of our tools. And so we also have an engineering team and a grant-making team that's highly focused on building AI in collaboration with educators. And that to me is incredibly important. We want to make sure that what is being designed right now is being designed with that expertise and with their thoughts around what is best for students and how best to support student personalization, how best to support educator co-pilots, how best to support, increasing affordability of developing content. How do you make sure there are those guardrails, cultural representation? And so these are all things that I think we have to continue to be thoughtful around. I think I was at the GSV Ladies Lunch and Joanne from All Here said something, I'll paraphrase, but to some extent, what would be a tragedy is to kind of look at this as the shiny new thing and forget the rigor. And I think that's one of the things that's really just part of how we design it going forward and continue to be thoughtful, that I think we really need to continue to focus on. And I agree with your question, James, that you alluded to, which is how do you continue to have that struggle as you're learning? Because right now there is this opportunity to just go to ChatGPT and ask the question and get the answer. And I think those are some of the things that we've faced in the past, and it is now on steroids. And so how do we continue to make sure that learning is actually about that learning process? And I think that's one of the things that I think I am encouraged about, is that people are having those thoughtful discussions, and that gives me optimism that these solutions will be designed with that in mind.
Yep. James, can I jump in? That's okay.
Please.
So maybe this is a little inside baseball, but I happen to know that both of you, like us, are huge bulls on India and are active in India. Are you seeing a difference around some of the questions and concerns with AI in your Indian companies than you are in your companies in the US?
So I think two things. I'll come back to that question in a second. I just wanted to say at a macro level, look, I grew up in the generation where information and knowledge were conflated, right? The fact that you had access to information was itself what made you look smart, right? Over the course of the years, we've had so many of these tools come in, and I see AI as the next set of tools. So we actually, by trying to put the brakes on it, might actually constrain it so much in the early days that you mentioned also, Vivian, that we may disadvantage the kids here by trying to think too much. They're smart enough, they'll figure it out. There will be some good and bad that happens with everything, as with smartphones, for example, but over a period of time, the right things will emerge. So coming back to your question, I think in India, people are looking at it very aggressively, right? So we have kids already. We have a company doing like a self-study buddy. Kids are downloading it, using it. They don't have access necessarily to smartphones themselves, and that's where they have to borrow their parents' phone and stuff. But everybody's looking at it saying, what's the best that we can do with it? What can we solve today that we could not do earlier? I think access is a great problem to solve. Access to a level playing field. Everybody's hungry to learn, and there's access to so much information out here. And so I don't think there are too many concerns there about, is it too early for kids to get on this and things like that.
I think also just to keep in mind that I think a lot of the activity in AI right now is still, at least as we see it in our portfolio, it's an opportunity for operational efficiency and greater productivity, which again, in the context of what we were saying, companies trying to get to profitability, this is a really exciting moment for companies to be looking for ways to improve customer service, their marketing strategies, developing content. I mean, I can't even tell you how many companies, in trying to develop personalized content or developing a lot of resources that engage learners with their different interests, we can now do that at such lower cost because of AI. I mean, there's a lot of opportunity there that I think can actually make it, I mean, if you think about some of the things that are so important for education technology companies to support technology adoption, those mentors to support and scaffold learning, the customer success folks that help districts implement solutions so that there is fidelity, so that there are renewals. These are things that have been extra costs that if you are trying to build a good solution in education, you've been thoughtful about, and now you have an opportunity to really find ways to do that in potentially a more cost-effective way. So I see it as, from that perspective, I'm quite excited about what this could actually mean for building sustainable businesses.
We're running short on time, so let me try to wrap things with maybe two areas to probe in. Number one, it wasn't too long ago that many of us probably used words like Web3, NFTs, cryptocurrency, blockchain, some of which or all of which are still relevant to some degrees, but peaks and troughs of interest, et cetera. How would you succinctly say why the title of this panel, which says AI era, and era usually means a long period of time, what's different about how we characterize AI relative to some of those kind of perhaps buzzy words that I just mentioned?
Yeah, I mean, I think for starters, AI is a product that has utility, right? And that was the biggest difference. If you think about AI, if you think about the metaverse, which, oh, by the way, I think that we still are in the earliest of innings, and there are going to be incredibly important companies built in each of those different kind of subcategories. But AI certainly feels like the natural evolution of the conversations we were having a decade ago with personalized learning and adaptive learning, and before that, the overall internet era. AI feels like it's here to stay. Certainly if you've got 20,000 people in San Diego talking about AI in education, it feels like it's more than hype. So you take the combination of the utility, you take the combination of the impact that it can have, both as far as businesses, as far as delivering value to customers, but also finding efficiencies in their organizations. It feels like that there's real underlying utility as opposed to a more traditional, or what you saw with Web3 and the metaverse, this kind of tokenization and effectively a greater fool's theory in terms of the actual economics. Certainly feels like we've learned, or the market has responded and learned to some of the challenges that we saw with that last quote-unquote era, or hype cycle. We've got certainly product-led growth and kind of utility being built within these offerings. And then as we were talking about maybe 20 minutes ago, around the importance of actually kind of having an underlying business model, business strategy aligned to these businesses, and really kind of it's part of kind of day zero first principles. I think the combination of maybe those 2 or 3 kind of core trends feels like this is much more of a acceleration of a trend and the next natural evolution, as opposed to a hype cycle.
I agree with everything Michael said. I mean, I think I see it in the portfolio in terms of the real way in which it's adding value to customers. Like, one of our companies, Panorama, is coming out with some AI solutions where teachers can now ask, show me the names of all my students who have missed 5 days of class. Show me the names of the students who have struggled with this particular context or concept, and that have and yet have covered this unit. I mean, these are some of the things that I think are really supportive of very broad use cases and supportive of educators, which I think fundamentally is a really important part of any education technology business that you want to be building. And I think that's something that is much more fundamental than I think what we saw with Web3 and NFTs.
There's no discussion in my mind. This is the future. If you don't adopt it, do so at your own peril. This is the big opportunity as well.
I'd be curious from the audience, a show of hands, who does feel bullish around sort of the advent of EdTech vis-a-vis AI, or who may feel bearish? Let's start with bulls in the audience. What's that? Both sides?
Pick a side.
I hear balanced bull, but I didn't get a full sort of room of hands up. I'd be curious then, who feels bearish or has material trepidation as we step into this era of AI? So maybe that means we have mostly either bulls or balanced bulls in the audience. Across all these topical areas, I think that is the right view. I mean, certainly all of us are doing something with our professional lives because of personal drive in and around of bringing impact to all this constituents. Many of us are parents and we sort of see it live. I promised my kids I would somehow infuse chess into this kind of panel moderation. And chess for me, even though I'm terrible, but I will play anybody who wants to play online, is one example, and certainly doesn't take a lot of the natural language processing elements of AI. But the AI vis-a-vis things like Stockfish, which used to be sort of the preeminent kind of engine to make chess moves, has been there for a while. And yet kids, whether it's because of Queen's Gambit or not, still want to play chess, and they want to still infuse kind of their own sort of psychological assessments and how they play into a live game for the most part. I mean, people will obviously cheat and find ways to kind of shortcut the system, but that is one example where things like AI or informed by AI can shortcut to the answer, but the game is wildly popular, and people like Hikaru Nakamura and others have fandom around it. But those are like
James,
small.
if I may make a comment though, right? Sorry to interrupt, but we are at this stage right now where somebody just discovered this SUV that can go, whether it's the Cybertruck or whatever, and there is no road here, and you suddenly have figured out that you can drive on this, drive off-road. right? And there's so much to discover out here, right? So it's just so early for us to be saying, well, no, you only have to drive on the road, you cannot drive on the shoulder, you cannot do this, cannot do that. There will be some mistakes made, there will be a few people who will have, a few startups that will have, fatal outcomes here, so to speak. But if we don't let the world discover what's possible, I think we'll be missing out on a huge opportunity.
I think that's a great note to end on. And so just let us thank our panel. I think some of us will be around for any questions, but please, round of applause for the panelists here.